put the spotlight next up and talk a little bit more about what the outlook is when it comes to Senco Gold. Came out with their quarterly performance. What is the outlook when it comes to revenue, jewelry demand? We've got Suvankar Sen, who's the managing director and CEO, now joining in. Along with him, there's Sanjay Banka, the CFO, I believe, at Senco Gold. Thank you so much for taking time out. Let's just talk a little bit more about what has been the growth driver, how the months of Jan and Feb have panned out, sir, so far.
Yeah, hi.
Yes.
So we have declared our result yesterday, and YOY we have grown 23% at retail, and overall, including other sales, we have grown 26%. Clearly, the growth lever has been the same store sales growth. So, like we have reported, around 17% same store sales growth, which is coming out of our existing stores. And we have rolled out almost 19 stores, 15 own store, and 4 franchisee store. So we are going deep. Secondly, the stud ratio is very important to improve the profitability. And as the industry rate is almost 15%, while some of our peers are clocking almost 25%. So stud ratio is second. And third is that ASP and ATV. So the ASP and ATV, that also we are maintaining in the range of 45,000 and 65,000. So these are 3-4 factors. The footfall has increased. We have also launched recently a new collection like CRM collection, which has gone quite well with the market. And across other markets, we are trying to improve the stud ratio. So if we look at, as we reported earlier, the stud ratio in own store is in the range of 13% as against the average of 11%. So overall, we are very happy. And even the gross margins and EBITDA margin has also improved this time quite considerably in line with our earlier last year 9 months trend. So for the full year, we are looking forward to have the same stud ratio and EBITDA margin, which are in line with our earlier guidance.
Sanjay, what I also wanted to understand was your margin trajectory, because they've been subdued for the last few quarters. Where do you see them headed, and what kind of growth rate are you expecting for the full year next one?
So we've already reported 26% growth, and Q3 is over, and now we are in the month of February. So we are quite confident that will be the growth after taking the Q4 number should be in the range of 22 to 25% overall. As regard margins are concerned, in Q1 and Q2 it was subdued, the 7% range, which was our earlier guidance. So versus last year 7 months and versus last year 9 months, and this year 9 months, we are almost in the line. That's what we guided the market, that for the current year, EBITDA will be slightly lower than last year, but as the competitive intensity is increasing, and we are now investing more in our growth, in our manpower and in markets, and also we have to give more and more offers to the customer as we are entering into the new markets.
Suvankar, Nikunj joining in. So nice to connect with you. I distinctly remember when we spoke ahead of the IPO, you actually wanted to go ahead and do the IPO because you wanted to expand without raising too much of debt. So now that you've gone public and it's been almost 2 quarters now, what has happened on the expansion plan, Suvankar?
The expansion plans continue to remain as it is. If you look at our historical past, every year we've been able to open around 18 to 20 stores in a sustainable manner with a mixture of company-owned, company-operated stores and franchisees. So that would continue to remain. We will continue to focus on our tier 2, 3, 4 expansion and creating a hubs in the bigger cities. So that is how it is. We have multiple formats, be it own store or franchisee. We are opening new formats in the form of our Everlight, which is the lightweight everyday wear jewelry store. We got Cines as a brand that we have launched, in which we are focusing on lab-grown diamonds. So therefore, through the various means and methods and the locations, ultimately the vision is that in whichever way, whether it is a 2,000-3,000 square feet.
To the jewelry buyer now, the migration from real diamond to, let's say, lab-made diamond. I'm not using the word artificial diamond, but they are called as lab-made diamonds. Is that impacting your business also?
Very honestly speaking, it is not impacting the business, because if you look at the overall ratio of gold jewelry and diamond jewelry in the whole country, the share of diamond jewelry sales is only in the range of 15 to 20% all in all. If we go down to the smaller towns, people there are still getting used to buying diamond jewelry, getting into the habit of buying diamond jewelry. So we believe that with the gold prices on the upward trend, the possibility of selling more and more diamond jewelry, which is made with 14 karat or 18 karat gold, which makes the price of gold lower than a 22 karat gold. And all of them will be hallmark. So there is no question on the quality and the price that you're charging for it. So that will be in an upward trend. Now, when it comes to lab grown, only when a buyer has gone through the journey of buying natural diamonds and there is an aspiration to buy bigger size natural diamonds, that is when, as an option, or as I wouldn't say a substitute but a complementary, because lab grown diamonds would be more from a fashion perspective and lesser from an investment perspective, they would start exploring on buying occasion to occasion, variety of shapes, sizes. So that is how the scope of lab grown will remain, and both will continue to stay. So it is very early days. Right now, if you look at our diamond jewelry growth, we are growing in terms of 40% in terms of value and 27% in terms of volume, which itself is a very good signal. And it is with the gold prices that are going up, it is helping people to compare and say, "Arey, diamond jewelry is as competitive and affordable as a gold jewelry. So let us go for diamond jewelry." That's the scene that is happening at the ground level.
All right. And give us a sense as to what the outlook is then when.
Very hopeful and positive that we will be growing at an upward of 20%, which is because we are already growing at 26%. And
Out, I'm just wondering, for Valentine's Day, is there any sort of a spike in the demand for jewelry?
yes, what's happening is now India, along with your traditional whatever events are there, like Dhanteras and Akshaya Tritiya, with the new generation coming in, people are very excited. We've got our own Valentine's Day offer running for the last 2-3 weeks, and the best part is it's not only the young generation who are celebrating Valentine's Day. There are people who are from the maybe a little more senior, the millennials or the senior generation, they are also coming to the store trying to gift for their wives. So it's really a very nice, warm occasion, and we are seeing a good response, especially in terms of diamond jewelry, because diamonds is what stands for love, and that is what we are trying to push and promote.
Still more precious, but we'll have that discussion some other day. Both of you, thank you so much for taking the time out and joining in.
Thank you very much. Thank you.